Welcome to the episode 4 of the retail inventory method. But before we proceed in this video lecture, if you did not yet watch the previous 3 short episodes, again it's short episodes, please watch those first. The links are on the description below. But if you are already finished, then let's get started. So, I told you in the past episode that if you have already computed the total goods available for sale at retail, then you just have to deduct the net sales from it to get the ending inventory at retail. So that's our goal. However, I told you also that it's not as easy as that because net sales has components. So I've told you one of its components is gross sales. And the second component is that the amount gross sales will be deducted with sales returns and allowances. But as to the sales discounts, I told you it needs to be ignored because, again, sales discounts do not result to inflow or outflow of physical units of inventory. So that's the first reason that I gave you. The second reason is that if you try to consider the sales discount in inventory estimation, I'm pretty sure that you will arrive at a wrong ending inventory estimate. And I said, I'm going to prove that through an illustration in this video. So let's do that. So, example, a company computes its cost of sales like this. So the beginning inventory is 0. So let's assume that the company is still starting. That is why their beginning inventory is 0. Okay? Now, the purchases of the company for the current year is 100, which is, when broken down, is 10 units times a cost per unit of 10. So, 0 plus the net purchases of 100, the total goods available for sale at cost is, for example, 100. Now, let's assume further that the remaining or unsold units during the current year is 4, because as if 6 units were sold. So 4 times 10, then we will have an ending inventory of 40. Okay? Now, 100 total goods available for sale minus 40 ending inventory at cost, the cost of sales is 60. And aside from that, let's assume that the 6 units were sold at 20 each because it's the policy of the company to sell goods at 200% of cost, or in simple terms, just double the cost. That's the sales price. So the sales will be 6 units times 20, then we will have 120. And in addition again, let's have a sales discount given to customers at 5%. Maybe because the customers purchased on account, but even if they purchased it on account, they paid within the discount period. So 5% was given to them. So 5% of 120 is 6, right? So let's deduct that from the sales to get the net sales. And we will get a net sales of 114. So net sales minus the cost of sales, which was computed earlier at 60, then the gross profit is 54. Did you follow? Now here's the important thing in the illustration. So assume that you don't know the ending inventory. I know that it's 40, but just assume that you don't know. I know that you know that it's 40, but as if you don't know. Okay? Kidding aside, let's move forward. Again, as if the ending inventory information is not given. Okay? So what will happen? So if ending inventory is unknown, then you cannot get the cost of sales also. And if you cannot get the cost of sales, then the gross profit will also be unknown. So what will you do? Let's just take these columns out first and let's focus on the net sales, particularly the sales discounts first. So again, what will we do? Answer, you need to do an inventory estimation based on the information of the gross profit ratio or cost ratio of the company. So, in our illustration, I have told you earlier that the company sells its products at 200% based on cost, or in simple terms, double the cost. That's the sales price. So, let's use that information. So, let's have scenario number 1. Under the assumption that sales discounts are considered or deducted or not ignored. So we will not ignore the sales discount. So if that's the case, we will use the net sales of 114 as if we deducted already the sales discount. Now, let's use this information. So if we use this, then we can conclude that the cost of sales is the 100% and the sales is 200%. Or the cost of sales is half of what the sales is. Now, we can just divide this 114 by 2 and then we will get the cost of sales of 57, which is not correct by the way, based on this. Again, these are the correct amounts. We are just pretending not to know this ending inventory, cost of sales, and gross profit. So, let's go back here. Sales minus cost of sales is 57 also, the gross profit. Now, let's compute for the ending inventory. So we have here the beginning inventory which is still 0 plus the purchases of 100. So the total goods available for sale is 100. And since as if we don't know the ending inventory, so let's put here the cost of sales that we have computed, which is the 57. And then this total goods available for sale or tigas 100 minus the 57, then the ending inventory will be 43, which is the result of working back. So this process is the working back. So this is wrong, right? And do you know what made this wrong? Yes, you know. You have an idea. It's the sales discount. Now, let's have the situation where sales discounts are ignored. So meaning they are not deducted. So if that's the case, now the sales will be 120. It will be used. So there is no deduction of sales discount. It is the gross sales of 120. We're going to use that. And since again, this is 200% of cost, then just divide the 120 by 2 to get the 100%, which is the cost of sales. And the answer is 60. And the gross profit will also be 60. That's 120 minus 60. So let's use this cost of sales of 60 to work back. So we have again the total goods available for sale of 100 minus the 60. Then the ending inventory is 40. And the cost of sales as well as the ending inventory, these amounts coincide with the correct ones, right? Why? Because we ignored the sales discount in the inventory estimation. So that's it. But before we end this topic, let me be clear again. Sales discounts are only ignored when doing inventory estimation. So, if you are making actual historical financial statements, please include sales discount and deduct it from the gross sales. Otherwise, you will be wrong in the computation of the gross profit, just like this one. So, the correct gross profit here is 54. So, if you observe, if you ignore the sales discount totally in making the actual FS, you will arrive at the 60, which is the gross profit as if there is no sales discount, which is wrong, right? So I hope I made that clear. So let me repeat that. Sales discounts are only ignored when estimating inventories. But if you are making the actual financial statements, please deduct the sales discount from the gross sales in order to get the correct net sales, in order to get the correct gross profit, and the correct net income. So, we're already finished in explaining why the sales discount should be ignored in estimating the inventories. So, now let's move forward. Because actually, there are still two components left to complete the net sales computation. And those are the employee discounts and the normal spoilage, breakage, and losses. So let's start with the employee discounts, okay? Now, before we go to these computations, let's define first employee discounts. So employee discounts are the discounts given to employees so that the employees will be encouraged to buy the products of their employer company. Like for example, a manager of a clothing company has been given 10% employee discount rate. So if he or she buys from the clothing company where she is working at, or he or she is working at, then he or she will enjoy a discount. And sometimes, if the friends and acquaintances of the manager buys, he or she can say to them, you can have my employee discount of 10%. So it's the same as if the manager is saying, let me be as if the one who bought the items so that we can use my employee discount privilege. So that's the employee discount for you. So tip, the next time you buy something, go to somewhere where you know the manager or an employee and ask them if they can use their employees discount privilege to help you. But don't abuse it, because truthfully speaking, I do not know if it is illegal for an employee to abuse his or her employee discount privilege. So, anyways, let's answer the question that might be bothering you. So, that is, why is the sales discount here ignored, but the employee discounts are added? Okay? So, let's use the previous example. Let's copy the example. Except that the 5% sales discount, let's convert it into 5% still, but it will be already called employee discount, okay? So, in simple terms, the sales discount will just become an employee discount. So, what will happen? So, some of these things will disappear. So, what's the first that will be changed? Of course, the gross sales. So, if you can still remember, the gross sales earlier is 120. That's 6 units sold times 20, right? But now, it will become 114 only. Why? Because employee discounts are automatically deducted or netted against the gross sales. So it's very unlike the sales discounts, because the sales discounts are stored in a separate account. The sales discounts. Okay? That's what changed. And because of that, if we ignore the employee discounts, or if you do not add the employee discounts to sales, this will happen. The sales will become 114. The cost of sales will become 57. And the ending inventory will be 43. And we know those amounts are wrong because these are the correct amounts, right? Now, if you add the employee discounts as what is said here, then the sales will be 114 plus the employee discounts of 6. The sales will be 120. Then the cost of sales will be 60 and the ending inventory estimated will be 40. And this 60 and this 40, all of which coincides with the correct values here. So again, employee discounts should be added back. You need to remember that. Okay? Next is the normal spoilage, breakage, and losses. So I have already elaborated this in the past episodes, and I told you that these are expected losses or spoilage on inventories based on the historical experience of the company or the nature of the company. I know you can still remember. So now, let's just answer, why is it added or combined with sales? I know they are different in nature, right? But they are a little bit similar because both results in the decrease of inventories. If you think about it, right? So, sales will decrease inventories because those will be delivered to customers, right? And the normal spoilage, normal losses, and normal breakage decreases also the goods available for sale because you cannot sell those already because they are damaged. So that is why they are combined. Okay? So that's it for the components of the net sales plus the normal breakage and normal losses and a normal spoilage. So again, the total goods available for sale at retail minus the net sales and the normal spoilage equals the ending inventory at retail. And with that, let's go back here and put a smiley on this question number 2 because we are already done computing for the ending inventory at retail. So, on the next episode, we will be converting this ending inventory at retail to ending inventory at cost estimated already. Now, if you have learned, please click like, subscribe, and hit the notification bell and select all to be updated on my next videos. Again, this is Glets Mar Ikasama and you are watching Glets Accounting Lectures.